Hi everyone, Erin James with Guild Mortgage here. It's Mortgage Myth Monday. Everybody always asks about this, so I figured we'd talk about it today. Credit score. So when you purchase a home, there are two major qualifiers that we use to get you started, and that is your credit score and your debt to income. We have products for everything, but I really want to talk about what makes up your credit score and understanding what it is. So there's a ton of information out there. But there are a lot of things when I bought my home many years ago, I didn't understand and it wasn't explained to me. So I hope this helps. First and foremost, your credit score that you're getting on Credit Karma and Experian Online is not going to be what the lender uses or sees. The lender is what you're seeing on your Credit Karma or those wonderful websites that help you watch your stuff, which I think is important. Watch your stuff, right? But it's only going back 3 years. When we pull the all-encompassing 3-bureau report every lender and bank use, it's going to be a 7-year window. Reason being, you're getting a loan for, $400,000 and for 30 years. A 3-year window is not a good visual as to what your credit history is. So obviously the bank and the lenders want to go back a little bit more. Okay. Now, if that means your credit score is lower than what you see, that's okay. We will talk about that. We'll walk through it. It may be because, 5 or 6 years ago, you were rebuilding. Heck, we've all been there. I have clients tell me all the time, oh, Erin, I really don't want you to see my stuff. First of all, your stuff is confidential with me. Second of all, we've all rebuilt a couple of times. I know I don't look it, but I'm 45 and I have. So with that being said, we'll be able to look into your credit, see where we need to improve on. Most likely what it is there is a balance too high or something. I have a simulator that I will run for you for free as being my client, and we'll make sure that you have the best credit score we can. The credit score maybe will qualify you for a lower interest rate or a down payment assistance. We have programs for the lower credit scores for those people who are rebuilding and need to buy now. We have some for no credit scores. We have programs all across the board. But if we need to improve your credit, we have the ability to do it, and I'll show you how. So before I let you go today on this Mortgage Monday, let's talk about the 5 factors on your credit score. 35% of your credit score is going to be payment history. 35%. Don't miss those payments. 30% is going to be the amount of usage. So the credit, I always joke, the credit bureaus want to see that you have access to credit, but they don't want you to use it necessarily. Keeping your usage below 20%. So 20% of your credit limit. That's what's going to keep you better off on your credit score. You're going to get the ideal credit score. 12% sometimes is what it runs, depending on whatever way the wind blows. If I understood the exact calculations, I'd be very wealthy, friends. But below 20% is going to give you an ideal score. 80% of the time when I do a credit simulator and need to improve a credit score, it's reducing a balance, which doesn't surprise me because that's 30% is amount of usage of credit. 15% of it is the length of your credit. So if you're planning on buying it 2 years, go get that secured credit card now. Call me. We'll talk about it. And the 10% is just credit miscellaneous. So that's how your credit score is built and what impacts it the most. For details, we can walk through it. But I know that when I first bought a home many years ago, I didn't understand that. So I hope that helped you. And if there's anything we can do, our information's below, and hope you have a wonderful, wonderful week. Thanks.